Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. With the recent Extinction Rebellion protests, concerns about climate change and sustainability are front-page news. 2019 has been a record-breaking year for fundraising in the renewable energy infrastructure sector, with over $1 billion raised, demonstrating the strong investor demand. Today, I'm delighted to be joined by two investment company managers, Jon Forster, Manager of Impax Environmental Markets, and Richard Crawford, Manager of the Renewables Infrastructure Group, to discuss their outlook for environmental markets and renewable energy. Right, on to the questions. Jon, what effect is the current public concern on climate change having on your sector?
Public concern and public awareness is having a substantial impact on our markets for two reasons. First of all, I think it's emerging as a new driver of growth. So public concern has become consumer awareness, has become consumer activism. So the consumer is demanding change, and governments and corporates are having to kind of move in alongside and provide the solutions. So across a number of our sectors, but most recently, probably the war on plastics would be a good example of that, where consumer demanding change is really delivering growth for the portfolio. I think the other thing to say is that more public concern means more demand for funds in this area. So I think that's definitely a feature that we've seen at Impax, and I think we've all seen it across the space.
Right, and how about you, Richard? Have the public concern, has had that an impact on your sector?
Well, as investors in renewable energy, indeed all investors, but in particular I think in the energy regulated market, what you want to see is consistency of policy. And I think what helps is the concern, almost the imperative now to decarbonise does then help with that consistency of investment, as well as all the things that Jon was saying about further appetite for what are highly sustainable investment themes.
Right, so how about political and regulatory pressures? Are they helpful for the sector?
Well, the impact on the regulators, effectively the politicians, of course, is in large driven by the electorate. And so the electorate being so keen on the decarbonisation, I think the underlying thread is very good for us to then see consistent policies coming out of the regulators, which are entirely consistent with the investment themes that we're dealing with, and in my case, investing in renewable energy plants.
Right, and how about the political and regulatory pressures for you? I mean, obviously we've seen plastic in particular being a big focus recently.
Mm-hmm. I think policy and regulation is a very important positive driver for growth in environmental markets. And I think it's not very well understood, but I think I'd just say two things. First of all, environment is really at the forefront of political agenda. So if you think, for example, in China, they've identified the environment as a constraint to economic growth and a risk to social stability. So if you look at the 5-year plans that they manage their economy in, it's only been more and more focused on environmental markets. If you then move to the regulatory side of things, again, it's a really strong driver of growth in our markets, because almost all of the sectors we invest in, the regulations only get tighter. So if you think about energy efficiency standards in buildings, water treatment quality standards, they only get tighter over time. And if you start to add in this emerging markets catch-up story, then you've got a really potent driver of growth and earnings.
Right, Jon, so can you tell us a bit about your investment strategy?
Well, Impax Environmental Markets is investing in pure play companies on a global basis across a full range of environmental markets. So we're in renewable energy, energy efficiency, water and pollution, waste management and recycling, and sustainable food and agriculture. So it's a really diverse group of uncorrelated sectors we're investing in. Just to give you some examples of companies to bring it to life a little bit. So we invest in a leading geothermal power company, which is kind of dominant player in developing projects. Obviously good baseload power from that, and they supply the equipment to projects into a global market. So that would be an energy example. Also in energy efficiency, we have a software company who are a really key enabler of the industrial Internet of Things, so really shaking up efficiency in industrial verticals. And then finally, we invest in a fibre specialist company. I'm sorry, I can't give names, we talked about that, who are making man-made cotton fibres that are substituting for cotton with better technical performance and a lower environmental footprint. So you can see the spread of it. It's quite
very
diverse.
Yeah. Really fascinating companies. You can really see the benefit for the environment there.
Exactly, and for performance and growth.
Absolutely.
Right?
Yeah. Richard, what's your investment strategy?
So Renewables Infrastructure Group, or TRIG, is looking to invest into the expanding renewables market. We are essentially about investing into infrastructure, usually already operating, so wind parks in particular, also solar parks, and battery storage. And we invest in these to give our investors long-term yield. So we're looking for high visibility of earnings over the long term. And we particularly like the renewables energy sector for the reasons that we've been saying. It's an expanding sector, which we think very positive regulatory and political framework behind it. We invest across Europe. Currently, we have UK, Ireland, France, Sweden, and Germany. And we do this to build a diversified portfolio. So this is particularly important for managing the risks that we face. By spreading the investments over this geography in different sectors, we manage down any residual regulatory risks. We also are operating in different power markets, and also we spread any reliance we have on the weather in any particular region.
Again, a very diversified portfolio, different types of energy spread across the region. That makes sense. Now, there's been a lot of talk about subsidy-free renewable energy. Now, is that really viable, Richard, or is it just a pipe dream?
So I would say that already investments are being made on a subsidy-free basis. It does depend on the project, and it is the very best projects which are able to generate electricity over the life cycle at a cost which is competitive with any other form of generation. But it works best where, in the case of wind farms, we're able to build at scale. So the best illustration I can give you is in the Scandinavian market, where because of space and because of relatively lower planning restrictions on the heights of turbines, the wind farms can be built very large and with the individual turbines being very tall. This gives better wind resource and general economies of scale. So we already have made 2 investments in the Swedish market, and these investments have much less reliance or no reliance on subsidies versus other investments that were made earlier on. Also, I think more recently, we're beginning to see solar becoming also viable without a subsidy, although better at the more southerly latitudes within Europe, clearly where the solar resource is better.
So it's already happening, in fact?
Yes.
Excellent. So, Jon, in one sentence, what's your outlook for the sector?
Well, we remain absolutely convinced that environmental markets are going to deliver superior growth over the long term compared to the global economy. That's in order to address the challenges around climate change, resource efficiency, and to address the pressing problems that are seen around the world. So I think, very confident of long-term growth.
Yes. And Richard, what's the outlook for the renewable energy sector for you?
Well, again, highly positive, we believe. Decarbonisation is, we all believe now, an imperative. And within energy, the way in which that decarbonisation is being achieved is more and more through the low carbon or zero carbon generation of electricity. So we're seeing electrification happening. We can see this in vehicles as just one example. So more electricity providing the needs for our energy needs, and that coming from renewables.
Right, well, with all the consumer pressure and the political pressure, it'll be very interesting to see how this sector develops. I'd like to thank our managers very much for joining us today. It's really encouraging to hear their positive views on what they think this year and beyond may hold for renewable energy and environmental markets. I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and you need to have a well-balanced portfolio. If you are in any doubt, you should talk to a financial advisor. Thanks so much for watching.